So, hello everyone. In this video, we're going to talk about WN informations and how you can use them in your trading. So, WN informations are you're going to use them to make your weekly cycle patterns. Okay. So, what is your weekly cycle pattern? It's going to be your W formation. It's going to be retrace, retest, continuation, and then you're going to have your M at the top, peak formation, right? Rise, your drop, rise, drop, and then your W again. So this is your perfect pattern that you will see play out sometimes. Sometimes you will see another rise drop right here, but right here I didn't do that just because of simplicity. So right here you're gonna have your first W, right? So this will likely be Monday, Tuesday, Wednesday reversal, Wednesday reversal. Then you have your Tuesday, Friday, whatever you want to say. You know, just your days. Okay. So here in Mondays, uh, Mondays, Mr. Market Maker is trying to collect as much as many chart traders as he can. Okay. Chart liquidity is in here. You can see by the vector candles build up at the lows, and by the psi areas are being built up here as well. Um, so we will leave the zone on Tuesday, Wednesday. You will see some sort of information, head and shoulders pattern play out at the top. This is your peak formation, try a high, try a low. You will see a reaction happening, the weeks. And same with the lows as well for the W informations. They're all ranges. You can treat them as a range. So yeah, so your Tuesday, Thursday, are you gonna be your continuation days or are you gonna be your consolidation days? Just AMD type trading, okay? Ooh, I haven't seen this one in a really long time. We have like a wedge like this, but yeah, to be honest, I get carried away by this. But let's look for one. It's very rare to find a very perfect one because of the amount of volume that you have to have. Also know that the cycles aren't static. It means that you don't always will see the same type of thing. Okay, most of the time it's gonna be this. You know, can you have your M rise drop, and then right here your W formation. I can't do it because of the task bar thingy, but there you go. This is your pattern, right? And then if you get this, you duplicate it, then if you turn this, I can't turn this around, man. But I guess you can like image the image in your head of this turning around, like how you call it? What do you call that? Like, I fucking forgot the name, man. But when you just turn this around, and we'll see here there'll be formation right here, rise, drop, rise, drop, rise, drop, information right here, and then you're gonna see your whole formation settle. So this is like the part that you have to remember. The other part is just gonna be the exact same but the opposite. Okay. So right here, I guess you can kind of see this pattern already play out right here. So right here, M formation, rise drop, delete formation, rise to the upside. Okay, then you see this type of formation, exact same with the opposite, delete formation, rise drop, and then right there we did have a really nice rise drop right here, but we get recovered right here, and we broke this low. So also we have to remember is every time you go up or down in this cyclic pattern, you're gonna have highs and lows. Okay, so right here you have a low, you have a high right here. Okay, because we're looking for bullish trends right here. You're looking for bullish market structure. So higher highs, low lows. Wait, higher highs, higher lows. My bad. So right here, this high, this high is high. This high get swept right here. Okay, that's good. This will break a structure. That's good. You don't mind that. But if this breaks, let's say this formation right here, this goes all the way down right here, collects effectives right here, and then retest back the high right here. This is not good because you already broke the level one. Okay, so you want to keep everything in ranges. What you also could do, I guess, is put everything in a box, right? So this is your W. Then you're looking for your First step up. So this is your rise drop, rise drop. Like I said, it could be higher with more rise drops, but then you're gonna have what's it called? Another type shape, and it's just not simple. Okay, I just drew that one because it's simple. Normally, you have three hits to the high with factor candles, or you're gonna have two hits. It really depends on your market and how volatile it is. And right here, you're gonna have your information. Then here, and then the same thing is gonna appear. So right here, drop, drop, and then here, peak formation. So peak formation are gonna be your W's and M's. Okay. So right here, W formation, and right shot right there. So this is the thing, okay? So this is okay. This is fully okay, right? There's no issue in this, except that it's not that the cleanest thing that I ever made in my entire life. But it doesn't really matter. Like I said, simplicity is really important right now because you guys have never seen this before, probably. So I have to explain this to you guys as simple as I can and in an efficient way. So right here, this is your low, okay? So every time you go higher, lower, you're gonna have a range that's built up, okay? See? You have your ranges are being built up, your support and resistance. Okay? So let's talk about this range right here. Okay? If this retest right here, then normally you're gonna have your 50 AMA do something like this, okay? Yeah, do something like this, and then right here, it's gonna go against it. Okay, this is proper 50 AMA movement right here. So let's say for this first part right here, this retest goes all the way down here to the 50. There is nothing wrong with this. It uses that last highest support. This is fine. If it breaks back in the middle right here, this is where you get a little iffy because then you can have a weaker formation, I guess. But if it breaks all the way down right here and breaks this low right here and gets the change of character, for example, then that is where you're gonna have problems because this cycle is probably not gonna be valuable. Okay. So right here, same logic applies. If it breaks this, it comes in this zone, you're gonna have some sort of information right here, as you can see, and that is too early. Information right here, same bullshit, breaks this zone, doesn't count. If it breaks this zone and continues to go up, then it doesn't count. Same bullshit applies with this and with this as well. You have your ranges. You hope it stucks in that range. You can use ADR to see how big that range is, and then calculate it and see how much pips it has moved or percentage it has moved up and down in the previous couple of days, and then you can see if we have overextension, for example, and all the fun in that. So using like knowing this knowledge right here, the factor candles should tell you that you're also going to go higher by seeing more reds right here, for example, by seeing blues right here, for example, and your psi high, psi low at the bottom of this range, seeing a type of liquidity sweep. Collecting liquidity was sitting here a previous time. We collect this liquidity and then we move up, okay? And every time we have liquidity to grab, we grab it and move higher. This is respective liquidity control, and this is really good. So every time you move up, you collect the imbalance immediately and try to collect them as fast as you can. This is perfect imbalance recovery. This happens a lot when Mr. Market Maker has zero interest in coming back to this area. You're gonna see this happening at a really low lows or really high highs. For example, where Mr. Market Maker is moving price aggressively, but in a trend wise, not as in a rocket, right? So you have a rocket that just flies like this, for example, right? It's more like an airplane landing, just smooth way up. So that's the same way you're gonna look at it. If you have a trend that flies up, you're gonna see a lot of green factor candles that have to be recovered. in a nice trend with the 50 EMAs at the bottom, most of the time you're gonna see price recover those imbalances and then move higher and higher and higher really slowly. And most of the time when you're investing and you're gonna see something like that appear, that's a good time to invest because you know your trend is really good nicely and you're gonna have a nicely trend upwise. Okay. So that is your thing. The information and W formation are gonna be really important to you guys because you're gonna use them a lot in your patterns, right? You're gonna use them a lot. So looking at these patterns, you have to have over, like you have to see like over 500 of these patterns in your experience to start actually seeing them as what they are. You know, if I show you a chart right now after teaching you guys this, you're gonna see W's, 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 W's appear all over your chart without them even being there. You're gonna hallucinate, as my students said. So yeah, um, so this is a W formation. This is a W formation. Uh, this is a W formation right here. Just a bigger version of it. This is W. There's just all W's. Okay, W's or a double bottom has to be found on the bottom of the chart. Okay, the logic applies in here, bottom chart, not here. You know, if this is a W, then it's fine. You know, it's still fine because you're still looking for an uptrend. But if you have a W right here, this it's not good, man. It's not good. So right here, this is your W. Then after this, you see drop continuation of the 50 EMA, the sitting right here. For example, your entry has to be taken of the 50 AMA break. So let's say your 50 AMA and it's like this. Right here, a break of the 50 AMA. You have to wait for a confident candle breaking the 50, 30, 13. I mean, and the 5 AMA with one confident candle, a retest, and then break to the upside. Okay, that's your perfect W formation. You're gonna see this happening a lot, man, a lot of times. The W is really everywhere on your chart. Information is gonna be the complete opposite of that. So right here you have your W formation right here, and confident break, confident candle right here. W. This is your entry point right here. Take your profits every time you clear effective recovery zone. So right here, recover this. This will be a take profit right here. And then if you look at the left side, this would be take profit right here. So you would have taken this hit right here. As you can see, this was the weekend, so you would have been careful right here. You see there was an M structure right here type thing. So you would have exited position right here. You could have even went short right here, taking your profits right here. Wait on the rebound to this 50 EMA, seeing this reflected counts appear right here at the lows. Just try and push up right down, collecting this liquidity right here with this move down, collecting liquidity. W formation type thing, move up, and again, continue the cyclic pattern right here, again and again and again. You're gonna see them appear everywhere on your chart, man. Just, just get used to seeing them. Really get used to seeing them, man, and then you will understand the market in a better way. Okay. So more tips to find them and things to find them is using a 50 AMA is going to be really helpful for you because you're going to find your AMA most of the time. Your 50 AMA, the information is going to be built up above your 50 AMA most of the time. Okay. Then your B bouncers like this is going to be your 50 AMA resisting against it with a 13 and 5, clearing this zone perfectly, man. So yeah, this is your logic for today, man. I wish you guys a very nice day, and I'm pumping out these videos really fast for you guys so we can all take advantage of the patterns. Thank you for listening. Have a nice day.